Okay, two, three, four. Let's go, folks. Welcome to Sunday Night Stock Market Futures Live. This is Bob Desmond of the Contrarian Trader. And what we're going to talk about tonight are, of course, the stock market futures. We're also going to talk a bit about the headlines. First, we're going to go over the headlines, uh, see what the mood of the markets are. And I'm going to talk to you about the longer term strategy for these markets that I have in play. I get a lot of questions about why I have a certain style that I do. Why am I bullish on the market, but dour on the reasons why the market is moving up higher? So first, I'm going to put a question out there. How is the sound? I just had to plug my mic back in. Hopefully the audio is good. And I'm going to check around here to see if we are live on Twitter. And we are. Hello, Twitter. And we are on Facebook. Not just one channel, but now three. We have a Facebook. I don't talk about this enough. We have a Facebook discussion group. And I'll provide that link later on so that you have it. Yeah, we're live on Facebook. We are live in Best Stock Charts, the discussion group. Hello, all there. And welcome to another week, another trading week. The futures markets are open. Don't forget daylight savings. Option wrap. Hey, how you doing, man? From Twitter. Good. I'm trying to get a bigger Twitter audience. So thanks for joining in. I really appreciate it. Steve, hey, blockchain. Hey, guys. Good to have you. All good stuff. All right, so for members that are out there, if you didn't see the week ahead commentary, I posted it yesterday. It's on the blog. And I don't know why this keeps saying gold level. It's for any level membership. I have to have the developer take that off. It's for any level membership can get the week ahead strategy session. That's where we talk about the health of the overall markets. And I'm going to keep this to about 6:30 this evening, maybe 6:35, because we're going to roll into 7 p.m. the members in a circle private session where I'll discuss in greater detail our watch stocks. I'm going to give an overview here tonight, but I'm going to do a deep dive into those charts, our favorite ones, and we'll talk about what is the catalyst, what is going to want me to get long of any one particular stock, what must they do. So we'll talk about the weekly charts, the higher level view, then on the members in a circle session at 7 p.m. Eastern Standard Time, we'll talk about the daily chart, the 4-hour charts, and what, again, the symbol of the chart needs to display to us before we got long. So I want to begin this off with, there are very few people out there that I have a lot of respect for in this market. Peter Schiff is one. I talk about him often. Jeff Gundlach, he's a very, very famous hedge fund manager. He owns Double Line Capital. He's out in California. And Gundlach, we share the same thesis that the Federal Reserve is going to go nuclear very, very soon. I mean, if you think about it, they already have gone nuclear. We have a Fed balance sheet. I should have had this prepared. We have a Fed balance sheet that is now back above the $4 trillion mark. Yet again, this is their own data. Here we are. 4 trillion, 19 billion, 823 million and rising. So what does this mean? It means that it's diluted to the US dollar. It means that inflation is on its way. It's already here, but now they're just really goosing it, and you're going to see gold take off. Now, I digress here a little bit. Gundlach makes a couple of points. He's not putting a deadline on when it's going to happen, when the downturn happens. But it could be a year, it could be 4 years from now. Who knows, right? You want his position here is that you want to be positioned, and that's the way we have traded so far for the past year and a half. We have been setting up for a big decline in the market. How have we done that? We're buying the gold miners. We're buying silver so that when ultimately this market rolls over, well, then we'll be positioned because those are the areas where you want to be when you have a flight to safety. It's not going to be the US dollar. It'll be gold, silver, oil, whatever. And that's what's going to lead the markets higher once we do, in fact, roll over. Now, one thing I take issue with Gunlatch here is that on the topic of gold, he's an advocate for gold. He's been an advocate for gold for a long time. But he's talking about finding value at the 1400 mark on gold. I disagree with that. I think that where we closed out the week last week was very, very bullish. I think that we're going higher very, very soon. And I don't think we're ever going to see 1400 in the near term. I just don't think it's coming. I think we had our opportunity to add more to the gold mining trade, which we did 2 weeks ago. And I think that you have a train that's getting ready to leave the station. And I'm going to go over a chart of that in a moment. Now, who is supporting the market right now? It is not Jeff Gunlatch. It is not Berkshire Hathaway, because you can see that their cash position is huge versus the S&P 500. You have what is supporting the market right now are companies buying back their debt, buying back their stock with debt. And the concern that Gunlatch has is that the problem with the overall market that'll probably take it down are corporate debt defaults, because the way that these are being rated right now, they're not being rated properly, just like it was with the mortgage debt back in 2006, 2007, 2008, and then everything came tumbling down. Corporate debt is huge and getting huger. It's mispriced, and eventually you're going to see the corporate bond market buckle, and that's when all things come to an end. You get credit that freezes up. There goes the money that goes into the stock market, goosing it. And Colton, hey, I got your email about the change of emails. Okay, so I got it. We'll do that tonight. So watch out for the corporate bond markets. Look at symbols like JNK. That's a junk bond ETF. I use it all the time. Taking a look at the headline here, I think President Trump is making a big mistake here. He keeps talking about a deal with China. It's not going to happen. He should have stuck with his phase one press conference a few weeks ago and just said, I'm going to let this go on the back burner until after the elections. They're not signing a deal until after the elections. They want him out. They want Elizabeth Warren and they want Bernie Sanders, and they don't want him in. And so the Chinese are not going to help him get reelected. So this is not good. And he's setting himself up for the Chinese to beat him around, make him look poor by not wanting to sign a deal. And that's not going to help him into the elections. He should really just go silent on this issue. I don't think he's going to, but I think he's making a big mistake. So there's not going to be a deal here. I wish he would just stay quiet. Let's, before we go into, I'm letting the futures market settle down here. Let's take a look at one of my favorite charts. I've dusted this off for tonight's commentary because we are getting a lot of email with regard to my commentary with regards to the market rallying for all the wrong reasons. We have a global slowdown, no doubt about it. I've showed you the Federal Reserve's balance sheet. It is just out of control, and it's only going to get worse. You haven't seen anything yet. This is just the beginning. So when I look at when I need to get out of this market, I take a very, very high level view. And that high level view represents itself here on the Dow Jones Industrial Average quarterly chart. I've been updating this chart for 15 years, and I just updated it today. And I haven't looked at it in a couple of weeks. And you can see that on this quarterly basis, we have broken out yet again. We did so in Q2 of 2019. Ever since that point in time, we've retested the breakout point once in Q3. Now in Q4, we retested it again. And at current, we have a bullish key reversal bar. And I did the math earlier. I think 52 points. We're 52 points away from a new all-time high on the Dow Jones Industrial Average. It's a stone's throw. We could be there tomorrow morning. So this is the higher level view of the markets. I don't want to short this market. In all probability, looking at this chart from a 30,000 foot view of the battlefield, we are going higher. Why? It's for all the wrong reasons. The Federal Reserve is in there providing the Powell put. If you bet against it, you're going to get hurt. That does not mean that I do not have, as of this week, short positions on our watch list. There will be a time to get short of this market, and we are going to make an S-ton of money on it, but not now. To short this market is hoping when you should fear. Now, when you take a look at this chart, because technically I have this set up for a 100-year view. I want that really macro view of the marketplace. And here is the Dow Jones 100-year view. And overlaid here, I have the 10-year Treasury yield. And you can see that the correlation, the inverse correlation of the 10-year Treasury yield is vital for the Dow Jones Industrial Average to proceed higher. So we are very, very long in the tooth to the upside on this market. I'm not going to be the least bit surprised to wake up any given morning and that we see triple-digit futures to the downside and the bubble has just come to an end. What could be the catalyst? What could be the pinprick? It could be a bank that goes awry, goes south over in China. Who knows? You know, it could be any one of 1,000 things that are out there right now. Something in the derivatives market, a trade gone bad, an algorithm that caught a cold. Who knows? We just don't know. So you want to be hedged. But as it stands right now, looking at this 100-year view of the chart, the path of least resistance remains to the upside. You don't want to go shorting this market right now. Overlaid here, I have gold. Take a look at gold, playing catch up with the market. I disagree with Jeff Gunlodge here. He's bullish on gold. I'm not saying he's not. But to wait for a 1400 level to find value in gold is a bit foolish. The value was given to us by Jay Powell mid last week when he made his announcement. For the most part, I'll paraphrase. We don't care about inflation anymore. Don't talk to us about inflation. What we care about is buying every single asset out there to keep this party going for as long as we can make it go. And that's the bottom line. So with that being a known and the unknown being the pin that's going to bust the bubble, you have to stay long with a hedge. And that's the game plan that we are formulating right now. But at some point in time, at some certain date, I don't know whether it's going to be this week, next month, next year. I don't know. There will be a time to short this market, and we will be aggressive shorters to the downside, and plus long of gold, silver, the miners. We're going a little bit long here. I want to finish up this chart with a major league concern. I've been talking about this of late with this most recent breakout, and the concern is this, is that ever since, let's call it 2011, we have seen volume evaporate, and it is just picking up steam at current. And this breakout is not a healthy breakout in terms of volume, in terms of institutional demand for stock at these levels. So I would caution, if you're going to buy this market as I plan on doing, I would strongly urge that you have a hedge on that position. We booked profits early last week. We've been trading in and out of the S&P 500, the semiconductors as well. And I did post a video, if you haven't caught it. I didn't make a video about the profits that we made last week. I made a video because there's more value in it on a loss that we took. I suggest that if you're new to me, you don't know who I am, You don't trust me? You know, you're one of these guys that's on YouTube that betting you're going to make $1 million in 22 minutes. Watch this video. All right, it gives you an idea of the type of mentality that I have. I'd rather talk about my losses than my winners all day long, because you learn from your losses. Anyway, I digress. Oh, we have a members mastermind group that is going to be meeting in a short while. If you're not currently a member, if you stuck around so far in this podcast on a Sunday evening, 50% off titanium level membership, annual basis. You have to be an annual member. So 50% off titanium level membership. You can just sign up right now. You'll get invited via email to the inner mastermind group later on at this evening, 7 p.m. And I'll take your questions, whatever you want, and we'll have a great time. So what else? Oh yeah, and you still get the 14-day free trial offer. You can still fire me before 14 days. What else do we have here? All right, so we touched upon the volume. This is critical. Please pay attention to the volume, folks, on this breakout to new all-time highs. It matters. Let's take a look at the pre-market futures. All right, we're going to kick things off. These are going to be 4-hour charts. And you can see that we're about flat on the 10-year Treasury bond. We were overbought. We've pulled back here. And that's fine. Nice bullish reversal bar on Friday afternoon. So it appears as though the path of least resistance is resuming to the upside here. The US dollar. This is the dollar, the Dixie. The dollar is down. I think that we're going to break support here. The only fly in the ointment on this is that we are seeing a higher low here on RSI. So that's actually bullish for the dollar. Short term anyway on a 4-hour chart. But longer term, I think the dollar is done. Taking a look at gold, since we're talking about the dollar, we want to look at gold immediately thereafter. And gold is up at current. We were higher. We've backed off here. So gold looking good into the new trading week. And I want to point out on a weekly basis, folks, this is why I disagree with Gunlatch, is that last week we broke out on a weekly basis. All right, so 1400 is down here, right? That's a far drop after putting in a bullish reversal bar. The probability of us seeing 1400 again anytime soon is highly improbable. So we don't have a new weekly high yet. What was the high last week? 1519. No new weekly high yet, but we will be watching. As for silver, we are up about 1/3 of a percentage point. The chart is looking good here. Again, if you take a look at silver weekly basis, bullish key reversal bar last week, you need to be long of this sector, of these commodities, and long of the gold mining sector if you want beta. Barode, hey, what's the support level for gold? Last week's lows. Last week's lows. The low was, let's go back to gold. The low was 1483 spot. And that marked the prior resistance level. So we had a breakout the week of the 21st. Then last week, follow through after retesting the breakout point. Is that accurate? Let me check that out. Yep, the week of the 21st. So I'm expecting to see follow through to the upside here on gold. You bet, Barun. You joining in tonight? You're going to be on the inner circle at 7 p.m. I hope. Let's go to the. I want to talk about oil. Light sweet crude. Good to hear. See you there. Okay, crude is setting up. Let's get off the. No, we can stay here. We can stay here. This is fine. What I'm looking for here on crude is a breakout. And we already flirted with the breakout so far this week. We are up at current. I think that we're going to move higher here on crude prices. And the problem is this, and this is the reason why I am watching crude. Not that I want to buy it, but it's the arbitrage play for my home heating oil. Right? If you take a look at home heating oil, if you're in a state that relies upon home heating oil, if you heat your home, look at this chart. Start thinking about filling up that tank, because once we break out above this upper band of resistance here at 2.059, we're going a lot higher on home heating oil. But the Federal Reserve doesn't want to pay attention to that. That's not inflationary. They back out energy out of their inflation number. How convenient. Food and energy, they don't matter. It's bizarre. Absolutely bizarre. So we'll be watching for a breakout on home heating oil prices. So fill up that tank, because it appears as though we are going to go shooting up there fairly soon. Let's take a look at the stock market futures. We'll begin with the Russell. So the Russell 2000, I have my concerns here, very, very short term. I wouldn't go chasing this market short term. We left the week out last week on all these averages overbought 4-hour basis. Bring up your charts and take a look. So we have a new weekly high so far. Natural gas is running as well. Yep. That's a fair point. We'll go to that chart in a second. Thank you for bringing that up. And there's a cold front coming through the Midwest, I believe. Anybody out in the Midwest know that for a fact? So it may be a good week for energy. All right, so the Russell new weekly high looking good. Let's drill down to the 4-hour chart. And you can see, watch this, folks. We're going to get a pullback here. We are trading above. We left the day out on Friday above the third standard deviation Bollinger Band. We're trading up above it at current. It's following through. Yeah, it looks beautiful. If you're long, great. But I would be looking to put on a hedge right now. Sell covered calls. Expect a pullback. I'm not saying it's going to crash. Expect a pullback. It's a little bit overbought right now. Because you can see each time we get like this, like back here, we pull back. Like back here, we pull back. Nothing bad. You're just going to stair step higher. The Nasdaq. The Hoosiers. Getting a bit nippy. That's Wisconsin, right? Am I wrong? The Hoosiers, right? All right, the Nasdaq, same deal here. Trading above the third standard deviation Bollinger Band. Very overbought. Intraday. No reason to go get crazy. If you're a long-term investor, you don't want to trade it, fine. Sit out the pullback, but it's coming. And on that pullback is where we'll be looking to jump back in. Here's the S&P 500. Look at this. This is not going to last here, folks. Expect a pullback. Probably overnight. I'm not going to be least bit surprised to see overnight we get a pullback. So don't go. If we open up green tomorrow, I would strongly urge, do not go chasing this market. Let it come to you. And remember, volume is not good. Indiana, that's right. That's right. Gene Hackman had the movie with the Hoosiers, right? Thank you for that. Yep. Let's take a look at Bitcoin. A lot of news out of China about blockchain. It's holding its own. All right, so Bitcoin looking good here. It never came back down to fill this void. Hey, Sam. Sam is over in Italy. All right, so Bitcoin looking good. What else do we have here? Yields, we already went over. Nat gas, that's what we wanted to touch. Oh, look at this. Wow. This is a pretty chart. So we have a weekly breakout already on natural gas. Who's that, Jay, that mentioned it? Thanks, Jay, for reminding me about this. So already we are on a weekly basis above the third standard deviation Bollinger Band. We could stay that way for a while, so I wouldn't be all too concerned. I'd be watching for an entry point here to open a new position or add. Nice bull flag pullback here on Friday, 30-minute chart. Beautiful gap. This is going to fade here, and on that fade, you'll probably see some buyers moving in to scoop up the shares. Your long euro? Let's take a look at it. I think the euro right now versus the dollar is a no-brainer. I'm not a fan of the EU in any form or fashion, but at current, Brexit is on the back burner. I only deal in the facts, right? Brexit's on the back burner. Draghi's gone, and you may see a little bit more sanity move into the ECB now, and that should keep a bid under the euro versus the US dollar, because now we're just beginning to prime the pumps here. Again, we're back above the 4 trillion mark on our the Federal Reserve's balance sheet. So I think that all you're seeing here is, yes, you're right, Sam. You're at resistance, no doubt about it. I think we're breaking out through it. It may take a week or so. But once we break out above it, that means that the US dollar is in free fall and that we are going a lot higher on the euro. What's my price target on the let's go back to it. Usually what I do is I use on a 4-hour chart, I'll use the rising 20-period moving average as my first rising lower band of support. If we close down below it, then I look to the charts and I try to identify where do we have historical support at that point in time. So ideally, we find support at the rising 20-period moving average on a 4-hour basis. Watch for your bottoming tails there. Then take your crayon out, like here. Like, let's just use this for an instance, right? We hit the third standard deviation Bollinger Band. We pulled back, found support at the 20-period moving average, broke out, rallied. This is not the best because we went overbought right away. But you can see you want to buy at the 20-period moving average. However, that doesn't always hold, right? So don't be aggressive. Don't be an aggressive buyer at the rising 20-period moving average, because you may close down below it and you may get a better deal by waiting for a support level to get hit. So what's my price target right now? I would say wherever the 20-period moving average coincides with at any given point in time. It's a rising floor at current. So I can't give you a number. If I had to right now, the number would be 3,040 spot 41. But that's going to change and it's going to rise over the course of the next day or so. So in that ballpark, I would say. Let's go over to the stocks that we're watching for the coming week. All right. So I spoke about a few of these last week, and the first two I definitely did, IWY and the VONG. Both are segments of the Russell 2000. I think the Russell 2000 as a whole is lagging. But you have the IWY, which is the Russell Top 200 Growth iShares, outperforming, breaking out. So I'm looking at this is a weekly breakout. We're going to do a deep dive in the members session, 7 p.m. Eastern Standard Time. IWY, it's breaking out at current. Bring up some overlays here. You can see that we broke out last week. I think we're going to get a continuation move higher this week after we get that pullback, right? We're still overbought going into the week, 4-hour basis. We're waiting to get that pullback, perhaps a retest, ideally, of the breakout point. Then we step in, we go buying. VONG, this is the Russell 1000, okay? Still outperforming the Russell 2000. We broke out last week as well. We have RSI, which has broken out. There you have it. Stokes have broken out. Beautiful. Beautiful setup here. What else are we looking at? We are looking at the EDC. Oh, and folks, if I can't believe I didn't do this already. If you're watching this on YouTube, please, I beg of you, hit the like button, subscribe button, click that bell button to get notified when I go live during the week. And if you watch this on Twitter, could you please retweet, like, and leave a comment if you want me to get back to you on something? I'd appreciate that. I'm trying to grow the Twitter audience as well. And Facebook, give me that like if you would, please. Thank you very much. EDC, emerging markets. Okay, so at current, there's a grander plan I have with the EDC, emerging markets. And I think that in the short term, until this market finally rolls over and breaks, you're going to see emerging markets rally with the stock market, especially as the US dollar drops. Why? It's because the emerging market countries, their debt, and most of them are totally indebted. I mean, they have no free cash flow whatsoever. Their debt is denominated by and large in US dollars. So if the dollar pulls back, it's like a tax cut. So emerging markets are going to do well with the market. However, when the market blows up, and it will, emerging markets are going to crash along with it. However, longer term, what we're predicting is that out of the ashes, emerging markets will rise as the phoenix, the first out of the rubble that's left, because it's not going to be the United States at first. It'll be the emerging marketplace. And you can see that we have broken out on EDC. We broke out the week of the 21st, pulled back last week, did a retest, bullish key reversal bar. It appears as though we're going higher. Let's throw up a monthly overlay here. We're still on a weekly chart, but I'm using monthly overlays to find support and resistance levels. And you can see we broke out of a beautiful wedge formation. We broke out last week. We don't have major support for some time. There's a lot of upside potential here on emerging markets. Taking off the monthly overlays, bringing back up the weekly. We have resistance up here, 81.26. We like emerging markets. Weekly chart TMO. We spoke about this one last week. We were looking for a breakout. We got the breakout. We pulled back early in the week, did a retest, rallied off of that support level, closed just off the highs of the week. We broke out on RSI. We broke out on Stokes. Looking very good here. Let's overlay resistance levels. Keep in mind that we do have resistance up here at the 309.21 level on TMO. So just be cautious. We're not that far away. So if you're looking to buy from a risk reward perspective, you have resistance above. So not too much in terms of a return between where we closed out on Friday and monthly resistance. So just be forewarned there, okay? JD.com. We'll keep the monthly overlays. This is a weekly chart with a monthly overlay. You can see that we broke out the week of the 14th. Continuation move higher last week, the week prior. Last week, another continuation move higher. Let's bring up weekly resistance. We do have some resistance above here at the 33.27 level on JD. Moving on, Qualcomm. The semis are in fuego, folks. And you can see here that Qualcomm has broken out. It is moving higher. RSI hooking up, breaking out, or has broken out. Stokes higher lows, doing exactly what you want them to see. Let's take the monthly resistance level off. Take a look at the weekly view. And you can see that we have a bit of resistance above here. I think that if we get a pullback this week on the markets early on anyway, it'll provide you a good pullback to go jumping in to get long and put some distance between where we closed on Friday and this upper band of rising resistance on Qualcomm. Cheesecake Factory reported earnings. That's in the rearview mirror. We broke out the week of the 21st. Last week, a bearish reversal bar. We closed off the highs of the week. We were rejected at this resistance level. So we're going to talk about an entry point here. I'll set one for the benefit of those not familiar with TrendSpider and how it works. Here's the alert I'll be using. I want to get notified of a weekly breakout immediately. All right, so Cheesecake Factory weekly chart. We'll keep that active for 10 days. Triggered twice. Set it and forget it. The alert's set. Tesla, you know, I should have taken this off. You know what? We'll keep it on. We'll keep it on. It had a bearish reversal bar last week. It was trading above the third standard deviation Bollinger Band. I think we're going to pull back here. I'll talk in greater detail. I don't want to waste too much time here. I would not buy these shares tomorrow or probably this week. I think we're going to pull back further and retest the support level. I have one in mind. We'll talk about it at 7 p.m. GLNG, liking the setup here. Given the breakout on nat gas today, we're probably going to see a gap up higher on GLNG tomorrow. I wouldn't necessarily trade it. We'll do a deep dive into the daily and 4-hour chart first, taking a look at it, and then we'll divine where, if we get a pullback off of an overbought, intraday overbought condition, we'll buy on that pullback and we'll set some alerts. But last week, we held the breakout point. Let's drill down here a little bit. Oops. Zoom in. You can see that we broke out the week of the 21st, hit resistance, backed off, did a retest, very healthy stuff. And it appears as though we will move higher on GLNG. Very bullish. LABU closed at $40 per share. That's stiff resistance. I'm going to want to see the LABU, which is the biotech leveraged ETF. Not for the faint of heart. We broke out last week. I want to see a trade above the $40 per share mark. We're going to look to sell puts against LABU, generating income. We've been doing a lot of covered call selling on our gold mining trade for the past 4 weeks. We've been just generating cash flow because the gold mining ETF that we're long of has been in the downtrend, pulling back off of its recent highs, and we've just been selling covered calls, generating premium on that trade. I think that we're going to break out this week even further, so I'm going to wait for a breakout to sell more covered calls there. In the meantime, we're going to look to sell puts, which is a bullish play, a bullish play to generate income on LABU. So more to come there, members. NVIDIA, we're watching it. It's another semi-play, and it stalled out last week. Let's throw up some overlays here. Monthly overlay. Not much showing here. Let's take this off. All right, so we closed right at a support level last week. It was support back during the week of the 5th of November, 2018. Then prior to that, October of 2018. So we'll look for a consolidation here on the video. You need to drill down and take a look at the daily and 4-hour charts on this to divine when we would want to get long. Cure, I've been talking about this one for a while. We finally got the breakout on a monthly basis. I'm on a weekly chart, but whenever you see a dashed line, it's a secondary time frame. So in this case here, I'm using a monthly time frame. And we broke out last week. We're going to wait for the pullback, and we'll talk about that later on when we want to look to get long of Cure. I mentioned earlier that we had some shorts we were looking at. I'm going to talk about them in a minute, but I want to first talk about the banks. In very short order, I'm going to be looking to put on a trade in the banks. I'm going to be looking at the FAS. That's a leveraged ETF. You don't want the volatility. Look at the XLF. Same chart, different volatility. It's the only difference. FAS broke out last week. I think the banks are breaking out. They're going to go on a tear. So why are they going to go on a tear with interest rates this low? It's because the federal government is enabling them to take more risk on their trading operations, and eventually the support, the safety net of last resort will be us again, as it was back during the financial crisis. But from now until that point in time occurs, you got to be long in the banks. They're breaking out here. Let's take a look at why we don't want to short this market right now. I just spoke about being long of the banks. The FAZ puts you short of the banks, and this chart's not loading up. Perfect timing here. All right, so this is a signal that I should vacate this chart. We're having some technical issues here. In the meantime, as this loads up, let's leave off with a quick look at how the E-minis are holding up. They're doing well, but expect a pullback here, folks. And I'm going to wrap it up with that. Members, 15 minutes. I'll see you at 7 p.m. Eastern Standard Time. Thanks for joining in, everybody. Have a great trading week. Enjoy the remainder of your Sunday. Baroon, we're going to go over DPST. Yes, I like it. We'll go over that later on the member session. And folks, I will talk to you later. There's a 50% discount off of the titanium level membership. Use discount code T50 annual membership. Hope to see you in the trading room in about 15 minutes. Everybody have a great night. Speak to you then. Members, expect an email with the link. Have a great night, folks.